Hello guys, welcome back to a new video. Today I'm gonna show you my 930 scalping strategy, a strategy that I've been using it for almost 2 months now. I didn't want to share it with you guys because it was still in the testing phase, right? But after I put it into live trading, it shows promising results. So far everything is so good, and I'm gonna show you everything related to it. And one of the benefits of this strategy is you can get in and get out in the first 5 minutes of market open, right? This strategy is based on the volatility of 930, right? And this is not that Judas swing, that 930 Judas swing where you wait for that volatility to pass. So basically that volatility is at 930 is a manipulation leg, maybe to the downside and the upside, or the upside, and then after 940 or 950 you participate in that real leg. No, this is not it. This is capitalizing on that volatility at 930, meaning you can get out and get in the first 1 minute, 2 minute, 3 minute. And this is based on a buy stop or a sell stop entry, meaning you're not going to put a limit order, all right, and you wait. No, this is going to be a quick move. Price will dump you in and take you to profit or maybe stop loss, but the win rate is very good, very decent. But before we start, I'm gonna warn you, it does require some degree of experience with reading price. This is not a beginner friendly strategy, all right? But I'm gonna show you how it works. I'm gonna try to simplify it for you guys, right? And this is a good thing to add to your arsenal, right? I'm not saying that abandon everything you know, abandon your strategy. No, keep your strategy, but also learn this. It's good to finish early on the day, capitalizing on that move, because sometimes it's very, very clean, all right? So let's stop talking right now. Let's stop the introduction and let's get started with the actual strategy, all right? So let me give you the logic behind it first. So of course, for the time window, we're gonna use 9:30 a.m. New York time, all right? So New York time like this. So let's put a line here. And suppose that this is 9:30. So first of all, what you need to do is just determine the trend. All right, this is not a hard thing to do. You can, by just looking at the chart, you can know whether we are trading higher or lower. All right, this is the degree of discretion of the strategy. Just determine the trend, okay, from the past, and look at the bigger picture always. Now, suppose that we are bullish, right? This is not the bias of the day. This is just looking at the lift and determine whether we are bullish or bearish, and this is very easy to do, and we can see on the chart later on. We will notice that. So what will happen, and I noticed that a lot for the past 2 months and from my backtesting, is that before 9:30 or at 9:30, right, something will happen, which is price will sweep low. Suppose a low, right? It can be a high also, but let's take a low as an example. It will sweep a low, right? And after 9:30, price will violate a bearish, let's say PDRA, a bearish zone, a bearish block, a bearish imbalance, right? And that imbalance was the one responsible for the order flow. When it violates that, it will keep going to the upside. So let me explain that again. So suppose price was trading here before 9:30, and again, it can be also at 9:30 or just after it, right? So keep that in mind. It will sweep a low, and you want to look for better results. Look for a sweep. So that sweep, it has no closure. If we have a closure on that particular time frame, let's say the 1 minute, look for the 2 minutes, the 3 minute, all right? So for the time frames of this strategy, I tested it on the 1 minute. It works very, very good on the 1 minute, the 3 minute, and the 5, but most of the times the 1 minute. So you want to see a sweep on a certain low if we are bullish, okay? And you want to determine something that if we violate it, price will turn bullish, right? When you determine that, you want to put your stop entry, you want to put your stop there, right? So put your stop here. Again, this is not a limit order, this is a stop, meaning price will dump you in and trade to the upside, right? So price is still trading here and you want to put your stop here. So price will trade to the upside and violate this zone here, and it will take you with it like this. All right, so this is the base of the strategy, and I know it looks funny here, but when we go through examples you will see how that works. So let's remove everything for now and let's go through examples. And this doesn't happen every single day, but it happens a lot. The frequency of it is a lot, and the frequency also depends on how well you can read price. So if you are new, very, very new to trading, sometimes it will happen, but you will not see it. But I believe that most of my viewers are experienced with price, have a decent experience, right? Which is basically just looking at chart and naked chart and seeing how price moves. So let's go to 9:30 from today. Today was a bit, all right, a bit ambiguous. This is not the best example from today, but I want to show you all the situations, the instances that you can look at, and by time you will be able to pick the really high probability, the clean ones. All right, so today what happened, let me, okay, vertical line. All right, so as you can see, this is 9:30. The sweep happened after 9:30. So this is 9:30, and you can see that price traded to here into this low and took it like this. So again, you can see that this is a closure. So it's better to see like this, a wick, but it's not mandatory. All right, you can take trades like this where we have a closure. So what you can see is that if we zoom out, first of all, to determine the trend, we can see that we are clearly bullish, right? This is not determining the bias of the day, right? Because that Judas swing, all right, that 9:30 Judas swing, you have to determine the bias first, and then if you are bullish, you want to see price trade to the downside first, right? The manipulation leg, which it doesn't happen all the time. It has a really low frequency, right? And sometimes you are bullish and in fact that price is bearish that day, so everything is mixed up, right? No, this is just looking at the lift and determining the recent trend. The recent trend is obviously bullish. You can't make this wrong, all right? Obviously bullish, right? So what you can do is now we're looking for price to trade below a low, and we have that here. After that, so you can see that we are working at the 9:30. All this happening at the first 5 or 6 minutes. The next thing is you want to determine something that if price violates that, you know that there is a good opportunity or a good chance that we're gonna shift the direction and we're gonna keep trading on that direction, right? So for example, here what we have on this leg right here, we don't have a lot of imbalances, but we have something, is this. So what is this? I know it looks funny, but this is basically a zone or a swing point, right? And you see this low of the candle, the high of the candle right here. This is basically like this. And this is the sweep, right? So this right here, the low of the high, right? This is the low of this candle, and this is the high of this candle here. If you go to the lower time frames, for example the 15-second, you will see this exact thing. And what is this? This is a simple market structure shift. For ICT people, this is a breaker, right? And what you're gonna do now is you're gonna put your limit order here, or your stop order here. So here you are not waiting for price to close here, right? And then waiting for price to pull back and then take you with it. No, you're gonna put your limit or your stop order here, and price will explode to the upside and take you to your profit, right? So this is the first example from today. Let me show you a clear example. This is very, very beautiful. Let me show you. So on this video, I'm going to show you these recent examples, and in the next videos, I'm going to show you trades that I took based on this strategy, right? This is a break-even trade from yesterday. So when price takes the target, always put break-even. This is one, I talked about this in my previous videos. But anyway, this is different strategy. Let me go to 9:30. Yeah, so beautiful. This example is very beautiful, and I believe a lot of traders took it. But maybe they took it, but they don't realize that this setup happens a lot, right? So what happens? At 9:30 exactly, we took a low. First of all, let's determine the trend. Obviously, we are bullish, right? Higher highs, higher lows. You can't really miss this part, the first step, which is determining the trend. So when you are bullish, you're looking for a sweep of a low. And when you identify that low, and when you see price take it, the third step is ask yourself which zone or which imbalance or which PDRA, if price violates it, then we are going to that direction. We are changing direction and continuing the overall trend. So here, what we have? Here we have multiple choices, right? And this is a proof to what I said earlier, that is based on your level of experience. How you see it is based on your level of experience. Some traders will see this. When price violates this whole zone, I'm going to put my buy stop here, and price will take me with it. So if this zone gets violated, this is the overall breaker of price taking the low here, right? So this zone responsible for this. When price takes it, it's going to trade to the upside. This is a safe approach, right? This is a safe way to look at it. Some people will say this zone right here. This is also a right answer. Also, you can put it here. For me, I put it here. So what I saw is price after 9:30 did it to the downside, and it took the low here. After that, it traded to the upside and take this low. So this is on the 15-second, right? And then traded to the downside. So we have a sweep here. We have a sweep here. If price wants to continue to the downside, it won't take this sweep because it already took liquidity from here. It already did the damage here. Why would it want to go all the way to here one more time? So I put my stop order here. My buy stop, it would be here, and it took me with it. Again, you can use this. You can use also this. So this is the example from yesterday, and you can see this is very clean, right? So where to put your order? You have multiple choices here based on your level of experience. Let's go to another example. So it's better this way to show you examples. Again, if things are not clear, you can simply pass the 9:30 and look for something else. Look for something else within your strategy later on the day. This is something that to add, or maybe you can use it as your main strategy if you like it. So here what happened. Let's put again a vertical line on the 930. Right? Like this. This one is a bit tricky because if you look at the lift, we don't have a clear trend, right? We don't have a clear trend. So from the previous examples, obvious trends. Here we are in a range, but if we zoom in, we can see that it happened, right? So at 9:30, look what happened. We have two sweeps here. We took this low or this high right here, and also before that we took this right here. And let's say that we are at 9:30. Which one would you put your entry on, right? You put your buy stop here or you put your sell stop here. So which sweep is more significant? If we talk about extremities, all right, and the significance of a low and a high, right, the validation of a low and a high, we can see that this low, it created this high with a full body closure, right, on this time frame, which is a 1 minute. This low right here or this high right here is not that significant. This is internal structure because it happened between the low, the last valid low, and the last valid high, right? So this sweep is more significant than this, right? And if we take this sweep in this example, where would you put your buy stop? You would put it here, right? And price will take you with it. But you can see that this example is not the best because of the first step, which was determining the trend, and here we were in a range. Let me show you more examples. Let's go and see more examples together. All right, we have one here. So here at 9:30 we don't have anything, right? I don't see anything clean here. Again, this doesn't happen every single day. So if we put a line as always, let's put it at 9:30. This is Friday. First of all, determining the trend. We are bullish, right? So we're looking for a sweep below a low. And you want to look for a recent sweep, right? So what we have at 9:30, I believe that this happened at lower time frames, right? Like the 15-second, because maybe you can see that we swept this low right here, right? But on the 1 minute there is nothing obvious, so swept this, and maybe you can put a buy stop here. But for me, this is not obvious. This is not something that I would put my money on, and I would wait for more clear opportunities. So let's say that it didn't happen here. Let's move on. And again, I know that this is hindsight, but I told you the logic of the strategy at first, and we are simply applying that logic at recent examples. And in the next videos, I'm gonna show you trades that I took based on this. So let's put a line one more time, and first of all, let's determine the trend. Here at the most recent trend we are bearish, right? But overall we are bullish. But let's take a look at what happened, right? And let's apply the logic of the strategy. All we do is we are applying the logic of the strategy. Let's say that this is a sweep, right? At 9:30 we took liquidity from here. Again, it can happen before 9:30, just before 9:30, at 9:30, or just after 9:30. So we took liquidity from here, and in this case, where do you put your entry or your sell stop? Simply here. And if we take this right now as the sweep, right? So we have the two sweeps here. we have this and then the violating of this, and it will take you to the downside. And we have another one right here, which is this one, right? And if you go to the 5-minute time frame, right? So here's that sweep. Again, you want to look for that wick, right? On different time frames. I don't go above 5 minutes. So where do I put my stop here? If I want to take this sweep, right, and I recognize it, I would put it here, just like the previous example, right? Price swept this. If price wants to continue to the downside, it won't violate this. This is the third step, which is identifying that level of which if price takes it, it's gonna continue to the upside or the downside, which is this one in this example. And you can see that price, it will take you with it. Let's go for a final example, right? Final example. So here we are. The recent trend is bullish, right? After a huge drop to the downside, we are looking at pullback to the upside, and this is what we are seeing. So the trend here is bullish. You don't want to reverse this just because we have this, because this is a different cycle. This is a pullback. So let's go to the lower time frames again and see how that looks like. Let's go to the 1 minute. And after determining the trend, let's put a vertical line and looking for that sweep. So this is 9:30, right? So where is the sweep? Obviously it is this one right here, right? This is this recent sweep that happened here. Let's go to the 3 minute to look for that wick, and we have that here, right? You want to look for that wick. So we have that wick on the 3 minute here, and we are inside that imbalance. So a bit of context overall. So expansion, pullback, looking for another expansion. But the third step is confirming that. We need to confirm that. So let's confirm that on the 1 minute. Look for that level, for that critical level where if price takes it, we are trading to the upside. So here I would put it here above this, right above this block. You put your order here, a buy stop, and price will take you with it, right? Now suppose price wants to continue to the downside, so after 9:30 it will do this. Okay, your stop here, your entry is still intact, you don't have to worry about that. But if price violates that, it will take you with it. So this is the beauty of this. And I believe I took this trade. Yeah, I believe I took it. I don't remember which day this is. 20. Yeah, I think I took it. If I find a trade, I'm gonna put a screenshot here. So this was all the examples that I have. I can go again and look for another example, but I prefer to stop here. And in the next videos, I'm gonna show you trades based on this strategy that I took, all right, based on what I saw on that time. And I encourage you to go and backtest this yourself, right, and give me the results in the comments. But again, sometimes it will happen right in front of you, but you can't recognize it. Sometimes you will get the sweep wrong, all right. Sometimes you will get the violation wrong, so which level to put your order, your stop order on. But as every other field, you need to put in the hours in order for you to start seeing results, right? So I believe this is the end of this video. If you have any questions, DM me in my Twitter account or leave a comment down below and I will answer you as soon as I can. Now happy trading and good luck.